So this section is called Business Credit Made Simple. In this section, we're going to break down basically what is business credit and make it as simple as possible. So as we know, in the consumer world, there are three different credit bureaus. There is Equifax, TransUnion, and Experian. However, there are three credit bureaus when it comes to the business credit as well. There are Dun & Bradstreet, Experian Business, and Equifax. But the two that we're going to talk about the most are Dun & Bradstreet and Experian Business. So let's talk about Experian Business.
We help organizations and consumers make better decisions. We help clients connect with great customers and protect against some of their risks. In some countries, we help consumers improve their financial position by connecting them to their credit information. We help protect them, including against the impact of identity theft.
Our clients have consumer or business customers. Clients develop plans and then find and get to know customers, acquire customers, then grow and manage their relationships over time. We call this the customer journey, and we help at each stage. For example, we help clients plan how and where to develop products and services through understanding customers and trends in each market. We help with finding valuable customers and with knowing their likely needs, preferences, and behaviors. Making the right offer at the right time, using the right forms of communication, helps acquire customers. Growing customer relationships means selling more products or services where appropriate. We also help proactively manage customer loyalty, retention, and prompt payments. Throughout this journey, our clients' risk of serving customers often needs to be assessed. For example, how likely is it that your customers are going to be able to repay credit or are fraudulent? So Experian helps clients grow profitably throughout the customer journey and helps consumers manage their finances and identity.
Experian manages huge amounts of data, describing people, businesses, vehicles, property, and places, gathered from hundreds of sources every second. Businesses also have their own data from all their customer interactions. Data management finds and links in useful data to help make a decision. Analytics uses this data to assess the current position and predict the future. Platforms and products bring the data and analytics together for them to be used every day, helping clients and consumers make better decisions and protecting against some of their risks. Our people's expertise, global network, and trusted brand make it all happen. They create huge value for our clients and consumers.
Experian, a world of insight.
So that was a little history on Experian Business, where they were about, how they were formed. But the industry that we're going to talk about the most in this course is Dun & Bradstreet. This is how Dun & Bradstreet works.
Dun & Bradstreet, often called D&B, is the biggest business credit reporting agency. They provide information on business and corporations for use in credit decisions worldwide. Publicly traded company, D&B, on the New York Stock Exchange. Headquarters are in Short Hills, New Jersey. D&B roots track all the way back to 1841 with the formation of the Mercantile Agency in New York. This was 50 years before the first consumer agency, Equifax, was born. In 1933, the Mercantile Agency joined with R.G. Dun & Company and became known as Dun & Bradstreet. In 1963, the introduction of the Data Universal Numbering System, or DUNS, helped bring business information into the computer age. Today, D&B maintains a database of over 213 million companies globally. An interesting fact is that 4 U.S. presidents were former employees of Mercantile Agency, which later became D&B. Abraham Lincoln, Ulysses S. Grant, Grover Cleveland, William McKinley, all worked as credit reporters. The DUNS number is a 9-digit number issued by Dun & Bradstreet and assigned to each business location in the D&B database, each having a unique, separate, and distinct operation for the purpose. Every business must will assign a Paydex business credit score. The DUNS number is the preferred method worldwide of identifying businesses. Unlike National Employment Identification Numbers, or EIN, a DUNS number may be issued to any business worldwide. It is used by many foreign governments, including the U.S. and Australia, European Commission, and even the United Nations. More than 50 global industry and trade associations recognize, recommend, or require DUNS.
The main purpose of this section is just to break down the industry, break down the glossary terms, and make business credit as simple as possible. Some of the things that we're going to talk about, we're going to go into detail now, but everything that we're going to talk about, we're going to go into detail in further modules. So the most common forms of business credit are net 30 terms, SBA loans, working capital loans, invoice financing, equipment leasing. So I'm going to break down the different terms. Now, granted, all of these are different forms of funding available for your business that's completely separate from your personal credit. The most common and the first one that we're going to talk about is net 30 terms. Net 30 is a term that's used in the vendor space to talk about your payment terms. There are different things like net 10s, net 15s, net 60, but net 30 is the most commonly used term. And the first phase of building business credit, we're going to spend a lot of time on the net 30 terms. In this course, the first forms of credit that you're going to build are going to be vendor accounts. So net 30 is going to be the most commonly when used. There are also going to be some accounts that are net 10 and net 15. But net 30 is the most successful strategy when it comes to building business credit and boosting up your Paydex score. We're going to break that down a little bit later. SBA loans. Besides going into a traditional bank asking for funds like this,
all right, put the money in the bag. Put it in.
You're facing the wrong way, sir.
All right, give me the money.
Will that be from your savings or your checking account, sir?
Saving.
May I please see some identification?
Sure, there you go.
Thank you. Sir, we are showing a balance of $0.00 for both of your accounts.
Oh.
Next.
what most people do is they'll ask for a loan from the SBA. SBA stands for Small Business Administration. SBA loans are the most sought after loans in the small business industry, not because of its success rate, but because of the popularity of the Small Business Administration. SBA loans are great, but they're hard to be approved. 75% of all funds that are given to business owners aren't backed by SBA loans. They're given from alternative financing institutions, private equity firms, and small private banks. Working capital loans are the easiest to get when it comes to business credit. A working capital loan is basically a loan that's based on your projected ability to pay. Working capital loans are not made to run your business. They're not made to float your business for an extended amount of time. Working capital loans are not long-term loans. They're short-term loans that are designed to help you build your business, whether it is purchasing something, taking care of an emergency, hiring someone fairly quickly. These are short-term loans that are usually paid back anywhere from 3 to 12 months. But they're the best way when it comes to being able to build business credit because they do report, as well as it's not based on your credit, it's based on your ability to pay back that in your business name. Alternative financing is one of the best ways to start building business credit immediately. Those are things like invoice financing, equipment leasing, factoring. These are all business loans that have absolutely nothing to do with your personal credit, but all with the ability of your business to pay. Startup businesses from the ground up aren't technically able to get these type of loans without having a personal guarantee. Let's talk about a personal guarantee, or PG. PG does not stand for parental guidance. It basically stands for a personal guarantee, which means that you are personally guaranteeing this debt. Now, personal guarantee isn't for everybody. I strongly encourage you to build your business credit to where you don't have to do a personal guarantee. Anytime you're getting funding that's above $50,000, you're going to need a personal guarantee, typically speaking. If you haven't been in business for at least 2 years, traditional banks are going to ask for a personal guarantee. But that's why in this course, we're going to teach you how to build business credit that's separate from your personal credit, and you can choose the personal guarantee if you choose to. Let me give you some examples of when a PG would be warranted, when it's a good idea, in my opinion. When you're doing an equipment lease, whether you're getting new equipment for your office, all new office furniture, or if you're getting equipment as far as vehicles, when you're getting equipment as far as construction materials, those are different times when a personal guarantee might be warranted. The reason why I suggest a personal guarantee for these type of loans are because they're going to immediately affect your business in a major way. It's worth the risk in order to get that type of reward. We want to build your business up in such a way to where lenders aren't going to ask or require a personal guarantee. It'll be based on your decision and your discretion if you choose to personally guarantee. Now, I will tell you this. Building business credit without your personal guarantee is possible. It's what I suggest. However, if you do decide to build business credit and you do a personal guarantee, it makes it so much easier and so much faster. That's the reason why we have the 720 FICO coaching. Because the 720 FICO coaching helps you build your personal credit up to a point to where you can personally guarantee almost anything. There are two types of personal guarantees. One personal guarantee to where, God forbid, if something were to happen to your business, then you are personally liable. The second type of personal guarantee is more of a background check confirming that you are responsible for this business and you are who you say you are. Typically speaking, when you get working capital loans and alternative finance and equipment leasing, the type of personal guarantee that's often asked is to verify your identity, not to make you fully liable for the debt. So that's the basics of business credit. In this course, we're going to break down line upon line, precept upon precept, exactly what you need to do to be successful. But these are the basic terms that you would need to understand getting into business credit. In the next section, we're going to talk about a paydex score and what makes it so very valuable. But first, let's make sure we understand what we just talked about. Take the quiz below, and I'll see you in the next section.